All right, welcome back to Yahoo Finance Live. And yesterday, I'm sure many of our viewers spent the late morning watching Sir Richard Branson blast off into space, near space. However, we don't need to debate what space is any more than we already have. But let's talk a little bit about what this flight means for Virgin Galactic and really what it means for the burgeoning space industry, where you have you have government contracts coming in, and now space tourism starting to take some shape. Sam Korus joins us now. He's an analyst over at ARK Invest. Sam, great to talk with you once again. Let's just start with kind of your thoughts on yesterday's event and maybe just what it means for Virgin specifically and their ambitions and how you think about them as a leader, I guess, in this space industry, which again starts to kind of mature before our eyes.
Sure. And I think, as you said, the first thing to do is just recognize, this was an awesome event, very exciting. And, as his message said in space, inspiring, not just us, but a whole new generation of kids to learn and dream big into the stars. And I think what we're really seeing is this shift into this new space race, which instead of being purely government driven, this is a commercial space race. And, in terms of Virgin Galactic specifically, this was a test flight. They're going to have another test flight. And then they hope to do commercial flights starting in early 2022. So this is really I would say, the next big step in the space race towards commercial travel. And that's a big moment.
Sam, is it a big enough moment to justify Virgin now at a market cap of $11 billion? And today they're coming out saying they want to sell more stock and raise more money.
Yeah, when we look at the space opportunity, I think what people look at with Virgin Galactic right now and their near-term opportunity is space tourism. And the way that a lot of people think about this is that, people are willing to spend 1% of their total net worth on an incredible experience. Space tourism would be one of those. And so, as costs come down, once you get into the $50,000 price point, is really when you see an inflection in demand for space tourism, according to our research. But also when we're doing our research, we think the real big opportunity is hypersonic point-to-point travel. And that would be not just going up and coming down as a kind of tourism experience, but say taking off from somewhere on the East Coast and getting to Japan in 2 to 3 hours as opposed to 14 hours. And we size that opportunity as a $270 billion market annually. So we really think this is the first step. Space tourism is the first step. Hypersonic point-to-point is this massive opportunity that a few people are going after.
When you say space tourism, Sam, does that ultimately mean Virgin should be valued the same as another airline? Should they be trading at the same market cap as a Delta, which is about $28 billion right now?
So I do think, Virgin Galactic, at least the way that they're presenting themselves, is they have the potential and they're pursuing a hypersonic goal, hypersonic point-to-point. I would say that most airlines are not necessarily geared up for this future-looking, innovation-driven. But I do think, at the same time, it's important to remember that this is a space race. And so, when we're looking at all these different companies, one of the key things we look at is rate of innovation. And, you definitely have differences in that pace between Virgin Galactic, Blue Origin, SpaceX as well. And then you have a whole slew of these small launch rocket providers who are coming in. So I really think that, right now we're kind of seeing a boom in space activity, which is great. And it's exactly what, you want to see and a sign that the new space race is starting to happen.
Sam, you guys at ARK are well known for being early, sometimes very early. Sometimes one could argue too early on some of this. So I'm just wondering what the timeline is on, in particular, the hypersonic space travel or not space travel, but via space travel that you're talking about. And if there are any even companies that aren't public yet that you're looking to come public, and on what timeline to potentially be investments also.
Sure. When we talk about that, I think it's really looking at the 10-year time horizon. And I think, that is one of the things that differentiates ARK is that we are long-term investors and we do have this long-term time horizon. I did mention it earlier. SpaceX with the Starship is pursuing this. I think recently you heard that there's government contracts interested in maybe not just human travel, but it makes sense to do cargo as a first thing, deliver cargo, a huge amount of cargo to anywhere in the world in just a couple of hours there. Musk has been pretty straightforward with the SpaceX's coming public and has said that maybe Starlink would go public once they can predict future cash flows reasonably. And we've done a lot of work on Starlink there and hope to open source some of those models as well. And I think with anything space related, it is a huge amount of upfront investment. And that's what we're seeing. We've seen it with Virgin Galactic. Branson and company have put in over $1 billion just to get to where they are now. Same with Starlink. It's a huge upfront investment. And what we see with all of these technologies is this high upfront cost and then a technological driven cost decline that makes it more applicable and capable for any of us to afford. And that's really when we start to see these inflection points of adoption.
And Sam, I guess finally, just thinking bigger picture about how you analyze the space. There's a number of distinct opportunities. Tourism, we've got internet. Starlink is kind of pursuing that. You've got the colonization of the moon or Mars. There's cargo. There's government contracts you can pick up. Does it feel like we don't need to yet, though, worry about which of these companies pursues which opportunity most explicitly? And would there be a time at which you're starting to more materially, certainly there's a tendency for each company, but more materially say, this is only a play on X and that's only a play on Y?
I do think, there is a huge amount of opportunity, and it's likely that some of the biggest opportunities we haven't even thought about. I do think that there are, a lot of niches, and space is incredibly difficult. So it does require, I think, a lot of conscious effort and engineering in order to pursue these different opportunities. So I think, we can start to kind of see the general areas where each company is going. It's definitely possible for people to change their business models. But I do think, particularly with space, pivoting can be slightly more difficult than, say, for a software company there. So I think there's definitely, some unknown, amazing business opportunities out there. But with the existing companies, I think, we can see the typical path that they're trying to pursue and the goals they're hoping to achieve.
All right. Sam Korus, analyst, ARK Invest. Sam, always great to get your thoughts. Thanks for jumping on this morning. I know we'll talk soon.
Well, as companies across the U.S. look to adjust to a new reality post-pandemic, we're looking to Iceland and their 4-day work week. Let's bring in Kevin Delaney, Charter co-founder and CEO. And Kevin, some context here, because we were talking about this last week. It got a lot of us talking when we said there was a trial that was done over in Iceland, whether in fact we could see it adopted here in the U.S. What did you find? And really beyond Iceland, how common is the 4-day work week?
Yeah. It's a really kind of buzzy topic right now, and I think we're at a moment where we're going to see whether this actually takes off more or not. But there are other places that are trying. So Iceland had this. There's this new research report on this experiment in Iceland that took place from roughly 2015 to 2019, where about 1% of the workforce in Iceland had a 4-day work week. They backed it down to about 32 hours. And there's also the report are really encouraging about this being something that actually businesses should try. What we're seeing is that this is being tried elsewhere also. Spain actually has a trial which has been kind of related to the pandemic and some of the changes there. And we are seeing other companies in the US and elsewhere trying it as well. Kickstarter is one of the US companies that said that starting in 2022, it will begin trialing a 4-day work week. It's going to experiment with it and see how it goes. But they believe that the research suggests that this is actually something where employees can be more productive and happier by just working 4 days a week.
So it's interesting because if you look at the Iceland trial, Kevin, we found out that it was a 2-year trial, first of all, and in that wages necessarily did not take a hit, productivity didn't take a hit, and many employees who were part of that trial said that they felt like they had a better work-life balance. I mean, what's the chance that you think companies like Kickstarter are likely to find that? And to the broader question, I mean, the bigger companies, how likely is it that they will adopt this model, given where things stand right now?
Yeah, the research is pretty consistent. Across all the research that I've read about the 4-day work week, it actually suggests that people are as productive and their workers are definitely happier when you back them down to a 4-day work week. With the return to workplace post-pandemic, there's an opportunity for companies to actually have these. There's a new opening where people are rethinking when people are working and where they're working already. So there is an opportunity for companies to actually experiment with this. If I were running one of these companies, I would say, here's a team or a few teams. We're gonna shift them over to a 4-day work week, and then we're gonna see how it goes and compare it against everybody else. So there's an opportunity now, because workplaces are so fluid, to actually experiment with it. Part of your question is whether traditional workplaces will actually, and bigger companies will actually feel comfortable with this. And I think that's just a broader question that we're facing on a bunch of levels right now. Are managers and leaders of organizations comfortable with judging people by the outcomes of their work, by the outputs of their work, and not just the number of hours that they're sitting in chairs in front of managers at desks in the office? And I think a lot of organizations, and you could say that finance is maybe one of the industries where you see a lot of this, the managers don't actually have conviction that people are working if they're not sitting at desks in front of them. And so I don't think that's the right modern approach to management, but we know that exists.
So Kevin, we had a poll on this last week. Because we got talking internally here at Yahoo Finance, which one would you rather take, a 4-day work week or unlimited vacation days? The poll, those who voted said overwhelmingly 4-day work week. So I'm going to put you on the spot here. You're the co-founder and CEO of Charter. How would you think about this? I mean, what would you have to see in order to switch over to the 4-day work week?
I think this one is a no-brainer for, if you ask people what they want for themselves, and that is the 4-day work week. And part of it is that if you ask people about unlimited vacation, research actually shows that people take less vacation if you give them unlimited vacation than you give them a specific allotment. So that's not a net gain for a lot of people. But I think the 4-day work week is pretty interesting. And we've set up Charter as a laboratory for business practices for trying to transform the workplace. And a 4-day workplace is among the measures that we've discussed actually experimenting and seeing how it works for us. We haven't gotten there yet, but it's definitely on the list.
Yeah, I'd be curious to see how companies like Kickstarter do adjust and what the results are on that front. Kevin Delaney, Charter co-founder and CEO, good to talk to you today. Well, the Phoenix Suns and Milwaukee Bucks tip off for Game 4 of the NBA Finals tomorrow, with the Suns holding a 2-1 lead. It's been a bit of a different look for the NBA this year in the Finals. You've got Phoenix, a team that hasn't won a championship. Milwaukee hasn't won one in 50 years. And there's just one player on either team that has any previous experience playing in the finals. To talk more about that and much more on the state of the league, let's bring in Mark Tatum, the NBA Deputy Commissioner, as well as the Chief Operating Officer. And Mark, it's great to talk to you today. I will tell you, as Brian and I have experienced heartbreakers, for me in LA, Brian in Brooklyn, we sort of look at the finals and say, look, this is a bit of a different look, but you've seen a big bump in ratings, up nearly 40% from last year, on the back of what has been a very challenging season. Give me a sense of how you're looking at the state of the league right now as we go into Game 4 tomorrow.
Oh, thank you so much, Akiko and Brian, for having me. I would say the state of the league right now is great. We have two fantastic teams that are competing hard in the finals, and we've got, as you mentioned, some new faces in the finals. Two-time MVP Giannis Antetokounmpo is looking to crown the Milwaukee Bucks, bring them home a championship for the first time in 50 years. And then the story of Phoenix and Chris Paul, an 11-time All-Star, a veteran, the president of the Players Association, trying to win his very first championship and bring a first championship to the Phoenix Suns. So the competition has been terrific.
Hey, Mark, Brian here. And I guess one question naturally is, what does the international community kind of play in the ratings that we've seen with the NBA Finals? Because obviously Giannis is huge for the Greek market and the European market at large, but also just the NBA's aggressive expansion around the world in terms of getting streaming rights out there, trying to do better recruiting, just getting the product out into countries that maybe aren't as exposed to basketball. Obviously, the pandemic has made it difficult to physically travel and bring some of those games to other countries. But what have you seen on that front over the 2020-2021 season in international eyeballs?
That's a big part of it, Brian. You know, these games are broadcast in 215 countries and 59 different languages around the world. There are more than 100 players who play in the NBA right now who were born outside the United States, and 7 international players who are participating in these here finals, including Giannis Antetokounmpo, DeAndre Ayton, who is from the Bahamas, but also has family from Nigeria. Devin Booker, whose grandfather is Mexican, of Mexican descent, and so he's resonating very much in the LATAM community. And we're fortunate that these games get distributed all over the world, and people are watching it all over the world. But again, it's driven by the competition. As you said earlier in the program, our ratings are showing that. We're seeing double-digit increases. We just got the results back from Game 3. Sunday night, that was up 51% versus last year's Game 3. And as Akiko, as you said, nearly 40% up through the first 3 games. So it's clearly resonating with our fans.
Mark, there's no question it's been a challenging season for you. You could argue there's been some positives as well as negatives. The positives obviously being you've got more eyes on the game. You've had a lot of challenges from COVID, but also the injury, especially to star players. You've had players like LeBron James come out and say this is partly because the offseason was so short. As you think about that and the success, for example, of the play-in tournament, how do you take the lessons learned from what was such a challenging year into next year to try and keep this momentum going?
It's been an extraordinary effort by our players, by our teams to get this season up and running and to get to this point, quite frankly. And there were a lot of sacrifices that were made by the players, and we worked very closely in partnership with the Players Association. Our first priority was making sure that people could stay healthy and could stay safe. We did start the season in December and try to, we actually reduced the normal season from an 82-game schedule to a 72-game schedule. And one of the things that the players said was important to them is that they wanted to get back on track and that they wanted to have that month of August off so they could spend time with their families. You know, a lot of the players who have kids, they missed the summer last summer because we were in the bubble for a good portion of the season, the playoffs to finish up our season. And so that was important. So we had to work within that to try to get the schedule. And again, incredible cooperation and partnership with the Players Association to come to that agreement on the schedule for this season. And to get to this point where we're actually going to crown a champion here, hopefully in the next week or so.
And Mark, obviously the abbreviated season, you just touched on that, but another unique feature of the 2020-2021 season was the play-in tournament for the playoffs, the 8 through 10 seeds kind of scrambling with one another through single game play-ins in some cases to get that playoff spot. It's a little bit controversial. Some players saying they didn't understand why they needed that. I guess what was the feedback that you got from the play-in tournament? Is that a feature that you would expect to remain a part of the playoffs in coming years?
The feedback has been terrific from our, generally from the players. So that had to be agreed to by the Players Association. And we've been in discussions with them again about continuing that for next season. Our teams loved it and our fans loved it. So what we saw as a result of the play-in tournament was increased ratings for those games, increased competitiveness at the end of the season. And so, we were very pleased with it. Our players and the Players Association, I think they were very happy with the results. And it really brought in more teams and more opportunities right to the very end to participate in our playoffs. And I think that's what generated so much fan interest from that concept of this play-in tournament.
Mark, I know you've been instrumental in the league's efforts to internationalize the game. We were just talking to Dikembe Mutombo last month, talking about the launch of the Africa League. But things are still a big question mark over in Asia, especially on the back of what happened in China back in 2019. Where does that business stand for you right now?
Yeah, we're doing very well in Asia. In China, our games are broadcast on Tencent Digital, and games are broadly and widely available there. Throughout the Philippines, again, very, very popular. We're the #1 sport in the Philippines, and we're continuing to see viewership and interest at all-time highs there. And as you mentioned, Akiko, in Africa, just finished up the first season of the Basketball Africa League, our initial launch of a new league on the continent of Africa that had an Egyptian team win the Basketball Africa League championship. So our business around the world continues to grow, which fuels talent from all those parts of the world into our league, which makes the league that much more attractive to our fans on a global basis.
Well, and I guess that kind of segues nicely into this other point, but we have to acknowledge that USA Basketball did just lose in one of their exhibition games to Australia. They've lost both their exhibition games, and this is for a powerhouse program that a lot of people thought was the premier home for basketball around the world. I guess, what does it tell you about other teams around the world who have NBA caliber stars now, and where talent is kind of shifting around the world? It's not just, in the United States anymore.
Yeah, the talent really has been democratized. So Giannis Antetokounmpo from Greece and by way of Nigeria, 2-time MVP, and Jokic is the reigning MVP. So these international players now are not just playing in the NBA; they are MVPs of this league, most improved players, defensive players of the year, right? Rudy Gobert from France, and so they are having a major impact on the quality of the competition, on the quality of play in our league. And we think it's a fantastic thing. The world is getting better, and they're getting better. And I think that makes basketball a much more attractive game for the world to follow. So we're happy to see that level of competition continue to grow and grow.
All right, Mark Tatum, NBA Deputy Commissioner and Chief Operating Officer, thanks so much for stopping by Yahoo Finance this afternoon.
Toss things over now to my colleague, Brian Sozzi, who is live in Times Square, and he's got a very special guest, the CEO of Marriott International, Tony Capuano, talking a little rebound in the travel sector. Hi, Brian.
Hey, Alexis, thanks so much. Yeah, joining me is Marriott CEO Tony Capuano. Tony, it's good to see you in person.
I'll say. It's been too long.
It has been.
Thanks for having me.
Yeah, no, it's just good to be back out. And in a hotel like this is a luxury boutique hotel in the middle of New York City. I mean, what are some of the booking trends right now in a hotel like this?
Strong and growing.
Yeah.
As you might expect, as we're seeing across the U.S., the demand is disproportionately driven by leisure. But as we talked about earlier, the fall will be telling. We read with great interest some of the big banks here in New York talking pretty aggressively about bringing folks back to the office. And our hope and expectation is that'll act as a catalyst for strong recovery in business travel as well.
What is recovering first, leisure or business travel?
In most areas of the world, leisure. Certainly in the U.S., that has been the case.
It is amazing to me. We had Delta's earnings out this morning, and they're talking about leisure travel back to 2019 pre-COVID levels. Are you back there yet?
We're above in many, many markets. We just went through the 4th of July weekend. Our occupancy was through the roof. And maybe the most encouraging thing for us is we saw real pricing power. So if you look at our performance through the July 4th weekend, our room rates, our achieved room rates, were 10% ahead of where we were in 2019. And maybe more interestingly, if you just look at the subset of our luxury portfolio, we were almost 35% ahead in rate performance from where we were pre-pandemic.
So you're saying you have pricing power?
We do. Certainly in leisure.
This is a luxury hotel, so we're in the middle of Times Square right now. 452 rooms, 20 suites, one penthouse. Now, there's another location around here, Madison Square Park. I mean, are these hotels packed out? What are you seeing in the metro markets?
No. So it's really interesting. New York is a little bit different because there is so much leisure demand, which is propping us up. But if you look at business transient trends here in the U.S., we're at for corporate demand, we're at about 50% of where we were pre-pandemic. But again, if you slice and dice the data a bit, if you look at just secondary and tertiary markets, we're closer to 80%. So what that tells you is in the big urban markets, we're well below pre-pandemic levels. But again, that's why we're so focused on the fall. When most of the schools have reopened, kids are back in school, parents are returning to the office, that gives us some measured optimism about what business will look like in the fall.
You've hit the road again. You're back.
I have.
Doing your thing, traveling around.
It's fabulous.
Why is it so important to get back out there? Why is it important to get off the Zoom calls?
For a whole host of reasons. I think if you look at our business model, we're a business that's built on putting our people first. I want to get out and see our folks. I want to thank them for the incredible work they've done over the last 16 or 17 months. I want to visit with our owners and franchisees. As you know, we've got 7,600-ish hotels. We own less than a dozen. I want to get out there and hear from our owners. How are we doing in helping them work their way out of the challenges that have been created by the pandemic? Our net unit or our unit growth continues to be strong. I know you heard in our first quarter earnings call, we opened 24,000 rooms in the first quarter. Our pipeline has held relatively steady at about 500,000 rooms, and we got about 250,000 rooms under construction. So I want to get out there and talk to our partners, see how they're thinking about development, and maybe in the short term, more importantly, how they're thinking about conversions. Of those 24,000 rooms we opened, about a third were conversions. And I think until the debt markets for new construction really start to open, conversions will be an increasingly part of our growth story.
I think I remember those first quarter earnings. I interviewed you from inside my kitchen.
You did, and I think I was in my attic.
Yeah, talk about the new normal. Staying on the construction, is there too much capacity in the hotel industry after the pandemic?
Well, time will tell. I mean, even in headier times, you heard industry experts say the industry's not overbuilt, it's under demolished. And I think one of the things you've seen over the last year and a half is some changes in use. So you've seen some hotels used on a temporary basis, maybe a permanent basis, to help homeless find shelter. With the strong demand for multifamily, you've seen some conversion of hotels to multifamily apartment types of uses. You've seen some condo conversions. Obviously, you could argue that in the short term, we have overcapacity because demand has not fully returned to pre-pandemic levels. On a global basis, in May, we were at about 50% occupancy. In the US and Canada, a bit higher, about 55. That's still probably 40% below where we were before the pandemic unfolded.
I'm surprised to see how the stock has reacted. I mean, you're telling us you had a good July 4th weekend. Leisure travel is back to where it needs to be. Convince investors that the business travel will come back to where it needs to go.
Well, as you know, there are lots and lots of opinions about the future of business travel. You've heard people saying half of it will never come back. You've heard some, it'll come back stronger than it was before, and lots of opinions in between. It won't shock you that I'm optimistic about the future of business travel, but not just because this is what I do for a living. There are about 700 corporate travel managers who we talk to weekly. And I think we reached a real important inflection point in April when the CDC came out and said, if you are fully vaccinated, there's very low risk to travel. That in turn almost immediately saw them open up some of the booking channels, and that gives us some confidence. Two other factors, though, that I think are encouraging for us. Number one, we've seen this phenomenon over the last year and a half of a blending of trip purpose. So in the old days, you could sit in the lobby and say, that's a business traveler, that's a leisure traveler, that's a group meeting.
They kind of look like us, suit and tie.
Well, that's right.
Yeah.
Today, it would be harder to do that, but that's good news for our business. You're seeing folks that have learned, while it's not optimal, I can work from almost anywhere. And so if my family's going on a trip where in the past I might have looked at my calendar and said, there's no way I can do this, I'll go along. I did it last week. I went with my family to the West Coast. I got up at 5 a.m. every day to do Zoom calls in the lobby, and then had some leisure time as well. And I think that blending of trip purpose, what we hear from our customers, that'll endure well beyond the end of the pandemic, and I think that's great for us. The other thing, when we talk to our big customers, especially those that are in the client service business, accounting firms, law firms, consultants. They are anxious to get on the road and sit with their customers. But we ask them, we say, you used to travel, you were the ultimate road warriors, 200 plus days a year. Do you think you'll continue to travel at that pace? They said, some of the shorter one-night trips we may do virtually. However, when we take trips, we may go with a longer length of stay. And I think that's great news for business travel as well.
So the leisure traveler, they had their vacation, they have been cooped up for the past year and a half, they had their trip. How do you convince them to come back again?
For leisure or for business?
Leisure.
Well, the amount of cash that's been stockpiled, the amount of loyalty points that have been stockpiled, and the clamoring from their families to get out of the house and get on the road, coupled with some of the promotions we're doing on Marriott Escapes, some of the point bonuses we're doing through the Bonvoy program, and some of the things we're doing just to communicate with those 150 million members about which markets are open, some of the new properties we've added over the last 18 months. I think we're building real enthusiasm around travel.
So this hotel we're in, it recently reopened on June 1st, and the one nearby, I believe, opened in early May. Were you able to get enough workers for this hotel? And the workers that have come back, have you had to retrain them?
Well, the good news is this is a brand that has a lot of passionate associates. So we were able to bring back many of our well-trained Edition associates. But labor in markets where demand is accelerating rapidly is a bit of a challenge for us. So if you look at Florida, Texas, Arizona, California, the good news is there's lots of leisure demand in those markets, and we're seeing demand rise rapidly. But we are competing with labor. We're competing with our traditional hotel competitors, and there are some industries that have thrived during the pandemic, and they need more workers as well.
Have you had to raise wages?
In some markets, we have.
By how much?
It varies from market to market.
It's interesting. So you took over pretty much right in the middle of the pandemic from really one of the greatest CEOs that I have known, that is Arne Sorensen.
Me too.
What has that transition been like, and what is your 5-year plan?
The transition, I suppose on the positive side, which is not a great way to describe it, but on the positive side, as you well know, oftentimes changes in the CEO chair are because investors and or the board have lost confidence in the leader or in the strategy that leader has articulated. That couldn't be further from the case here. We have a well-articulated strategy, a well-articulated growth plan that was embraced by the investment community as evidenced by the performance of the stock, was embraced by the board, embraced by Bill Marriott. And part of the way we work through the grief over the loss of our friend and leader is to continue moving the company down that path. My experience has been our people are remarkable. As I'm out on the road now and I'm talking to our frontline associates, it would have been easy for them to get discouraged or frustrated. Quite the opposite. They view it as their responsibility and opportunity to help the company and our owners climb out of the hole created by the pandemic. They are passionate, they are incredibly adaptable, and they take on every day's challenges really with alacrity. And it is inspiring to see. I also have been comforted by the long tenure and the what I've called battle-tested nature of the company's senior leadership. One of the great things about our culture is that team has been together for years and years. And we've worked through conventional recessions, post 9/11, the Great Recession, Arnie's diagnosis, the unfolding of the pandemic. And it's a team that really understands what it takes to navigate the company through crisis.
All right, we'll leave it there. Marriott CEO Tony Capuano, good to see you. Finally see you in person.
It's about time.
All right, let's get out of here.
Let's do it again soon.
Let's go enjoy this penthouse.
Federal marijuana legalization, it is sort of the holy grail, if you will, that marijuana activists have been pushing for a long time. And it may be just a little bit closer to reality with a discussion draft of legislation that is being proposed by Senate Majority Leader Chuck Schumer, as well as Senator Cory Booker and Senator Ron Wyden. And Senator Wyden is joining us now, Democrat of Oregon, along with our Jessica Smith in Washington. Senator Wyden, thank you so much for being here. This is something, as I mentioned, that has been percolating for many, many years, but of course has gained momentum with all of the state legalization. What goal do you think would be achieved by ending the federal prohibition on marijuana?
The federal government is still living in the era of reefer madness. The feds are just completely disconnected with what's really going on out on the ground across America. And we've seen in Oregon, where we legalized adult use in 2014, and the skeptics said, oh my goodness, Western civilization is going to end. People are going to be so confused. The law isn't going to work. We didn't see any of that. And revenue, which is used for priorities like education and mental health, has gone up sixfold in a very short time.
Here, I'm curious about the taxation portion of this, something you've worked on as chairman of the Finance Committee. Can you walk us through how that would work under your proposal and what your thinking was on that issue?
Our thinking was first and foremost treating cannabis like you treat alcohol and tobacco. That was number one. And number two, we wanted to give a real leg up to small businesses and minority entrepreneurs. So for example, the tax rate for them would be something like 1/2 of what it is for the big guys. And that's kind of consistent with our priorities. And I'm often asked, so where does the money go? The money goes to try to address some of the harm that was caused by the failed war on drugs, and particularly give our small businesses a real shot at creating good paying jobs. I recently, and people always ask, where do you get your information, Ron? I have all these town hall meetings, and a few days ago, I was in Astoria, Oregon, and I went to a dispensary. And what they said is, for the first time in a long time, they're making good wages. They get health care, they get benefits. They just want to know how their small business can grow. And that's what the majority leader, Senator Schumer, Senator Booker, and I are focused on.
Senator Wyden, it's always interesting to me to hear folks compare marijuana to alcohol because obviously in terms of its cultural acceptability, it's getting there, but it's not at the same level. I mean, do you think that that is part of this as well? Are you going to cocktail parties in Oregon where everybody is smoking instead, we're vaping or having edibles instead of drinking cocktails? And is that sort of part of this, making it more sort of culturally acceptable?
The way I would characterize it is when I talk to folks at home and people come through Washington, people say it just defies common sense to not have sensible federal policies. And that means regulatory policies, so you have oversight to ensure public health. We just talked about taxes, and I call it cannabis common sense. It's just overdue, and the government, just particularly the federal government, seems so disconnected from reality.
Senator, the president has campaigned for decriminalization, so not quite as far as you want to go. Are you confident that you'd be able to get President Biden on board with this?
What we've always felt, and that's why we're going to use the comment period, for example. What we described yesterday was we're going to have a period between now and September 1 for people's comments. We believe this legislation will get sent to the Senate Finance Committee, where I'm the chair. We're going to have hearings. I'm eager to have those hearings. And so often on these kinds of issues, political change is sort of grassroots up. It's not coming from necessarily the top. But I'll tell you, I think there are a lot of powerful arguments to make this a bipartisan issue as we go. I mean, the fact is blue states and red states have legalized. The fact is that we have a powerful states' rights argument. What we do is decriminalize at the federal level, but we don't force a state to legalize. And I think my colleagues are going to have their constituents come up to them and say, this is going to promote the opportunity for safer and fairer conduct with respect to cannabis in every part of the country, with sensible oversight, sensible health policies, sensible tax policies. And I think under what we're proposing, while we're not forcing the states to act, so it is a real states' rights approach, we create an incentive for the kinds of reforms we're looking at.
I did want to switch gears a bit and talk about the reconciliation debate that we're seeing play out, this $3.5 trillion budget plan. You've said that this is going to be paid for. We're expecting tax hikes on the wealthy and on corporations. Can you talk about some of the specific ways that you plan to do that you plan to raise this revenue?
Well, first of all, what we're doing here is investing in the American people. We're investing in roads and bridges and transportation systems, and we're investing in people. For example, to make sure that broadband is available from sea to shining sea, no matter how rural your area is. Now, I feel very strongly that we're not going to raise taxes on working people. We're going to hit the pledge that the president has made to ensure that doesn't happen, that those working families don't see a tax hike. And the focus of what I'm going to do in the Senate Finance Committee is to eliminate the tax dodges that the super wealthy are able to use to basically figure out how to pay little or nothing in taxes, sometimes for years on end, and utilize these tax dodges, these tax loopholes, to basically not pay taxes and do something that no working person gets to do because they pay taxes with every single paycheck.
Senator Wyden, thank you for being here. We'll delve a little bit more into the spending package and infrastructure next time we have you on, and of course get an update on this marijuana legislation too. Senator Ron Wyden of Oregon and our Jessica Smith, thanks to you both. Appreciate it.